Well, the stock of Axis Bank has gained nearly around 20% in 2021 itself, and the Axis Bank trades at reasonable valuations of 1.8x FY23 price to book. The valuations are, of course, lower than an ICICI Bank, HDFC Bank, as well as Kotak Bank. And recently, CLSA maintained a buy with a target price of 10.50 per share on Axis Bank, and they stated that they're seeing normalization for Axis Bank ROE to 15% by FY23, and they're finding the valuations reasonable. In fact, CLSA sees 35 to 50% upside in top picks like ICICI Bank, Axis Bank, as well as State Bank of India. And hence, we at ET Now caught up with none other than Amitabh Chaudhry, who is the MD and CEO of Axis Bank, to speak on a variety of subjects like the pickup in capex cycle, what's the outlook on Axis Bank, as well as value unlocking in its subsidiaries, the opportunity that they see in fintechs, and also the overall growth and asset quality outlook for the entire sector. Speaking exclusively to ET Now, Mr. Chaudhry stated that he is seeing positive outcomes in collections as well as the recovery efforts across the entire financial sector is surely visible. August month has been better than the month of June as well as July, and there are reasonable indicators suggesting that the private capex is definitely picking up in select sectors like upstream refinery, steel, cement, pharma, and a host of other sectors. He also stated that he is hopeful that we should be able to contain issues around COVID, and while the risk of COVID wave 3 is certainly there and we should be cognizant of that, the government as well as the Reserve Bank of India have been supportive, and government monetization plan will take time, but that will also help jumpstart the overall economy. Mr. Chaudhry stated that while the retail delinquencies have surely risen across the board for the entire BFSI space in Q1, what led to higher retail delinquencies was the fact that retail customers had the moratorium advantage in COVID wave 1, while that advantage was not there in COVID wave 2. Some of the retail customers could survive the first wave, but they could not really survive the second wave, and the health cost in the second wave were fairly high, and hence the retail customers had postponed their EMIs. Mr. Chaudhry stated that the lot of slippages on the retail side also came in from secured assets. However, he is not really worried about the recovery, as the recoveries have already started gaining momentum in terms of the overall sector itself. The credit offtake, however, does remain fairly tepid and moderate. Large and high corporates are sitting on huge piles of cash, and they are not really tapping banks for their expansion plans, if at all. In fact, they are resorting to market borrowings, or they are coming to equity markets, or even they are tapping foreign markets for their financing needs. Having said that, there are considerable opportunities for the credit offtake as well as for Axis Bank to pick up in terms of the growth as the economy in fact revives. Mr. Chaudhry stated that the bank right now is operating at a 15 to 16% ROE, but they do have an ambition for the ROE to improve to nearly around 18%. And while this is a challenge, the journey is likely to take a couple of years. The important focus is, of course, to scale their subsidiaries. While the subsidiaries have been doing fairly well, they in fact contributed nearly around 900 crore to 1,000 crore in terms of overall profitability. He stated that it is fairly important to scale the subsidiaries further, as there is huge opportunity, and later on only they will be thinking of listing these subsidiaries. Besides that, he also mentioned that fintechs and payment companies have done a wonderful job, and in fact the Axis Bank would be making more investments in technology and also going ahead and doing more partnerships with fintechs. In terms of the overall opportunity, Mr. Chaudhry stated that Axis Bank is still a fairly small part of the overall market share, and hence there is a huge opportunity to transform and grow across all the businesses over the next 3 to 5 years, be it in retail, be it in wholesale, or be it in the credit card segment, or be it across the subsidiaries. And they are fairly cognizant in terms of the risk of the third wave. They would be watchful in terms of the economic revival, and also they would be investing a good amount of money in technology, partnering with fintechs as well as scaling the subsidiaries.